Ethereum is currently trading near $2,069, and if it breaks through $2,179, a key threshold, CoinGlass data, suggests that short liquidation intensity across major exchanges could reach $1.056 billion. This is not a speculative forecast, but a quantifiable marker drawn from aggregated perpetual futures positions on platforms like Binance, OKX, and Bybit. The $2,179 level is where the cumulative short positions become large enough to create a mechanical feedback loop in the market. When short liquidations occur, exchanges are forced to buy Ethereum to close those positions. This creates buying pressure at the very moment the price is rising, potentially amplifying the upward movement. This is what traders refer to as a short squeeze. The more short positions that are liquidated, the stronger the buying pressure becomes, which could lead to a rapid price increase from current levels. The significance of the $1.056 billion figure is that it represents a substantial amount of capital tied to bearish Ethereum bets. If the price moves above $2,179 and holds, the market could experience a sudden shift in momentum as these. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Positions are forcibly closed. This is not a guaranteed move, but it is a quantifiable risk based on current order book positioning. It's also worth noting that this threshold has moved downward from a previous level of $2,426 just 1 month ago. This downward drift reflects how bearish sentiment has shifted closer to the current spot price as Ethereum has declined. This suggests that the market is increasingly positioned for a continuation of the downtrend. But if the price breaks above $2,179, the mechanical response from liquidations could override that bearish positioning. The ETH price currently sits at a critical juncture. A 5.3% rally would be needed to reach the $2,179 level. If that happens, the market may see a sudden influx of buying pressure as exchanges execute forced buybacks. This could create a self-reinforcing cycle that pushes the price even higher than expected. Traders will be watching closely to see if this level holds or if it's a temporary bounce. The data from CoinGlass is based on perpetual futures positions, which are leveraged and thus more susceptible to liquidation events. These positions are held by both retail and institutional traders, and the cumulative short liquidation intensity is a direct function of how many traders have bet against Ethereum at higher price levels. It's important to note that while the data is clear on the threshold and the potential for a short squeeze, the outcome is not guaranteed. The market could still move lower, and if ETH fails to break above $2,179, the bearish positioning may continue to dominate. However, if the price does hold above that, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanical response from liquidations could become a powerful force in the market. The next signal to watch is whether Ethereum can sustain a move above $2,179. If it can, the $1.056 billion in short liquidation intensity could become a catalyst for a broader rally. If it fails to hold above that level, it may signal that the bearish positioning is still intact, and further downside could follow. The market is at a turning point, and the next few days could be pivotal in determining which direction ETH moves.